What is up, fam? It's about 11 a.m. PST here, and it's a little disappointing that SMCI couldn't actually stick to the 60 levels after a really good start in the morning. 60 was where a lot of option buyers had calls placed, and therefore, if the stock would have held above 60, there was going to be a good gamma squeeze, which would have pushed the stock to great levels, which means that market makers would have to buy the stock and therefore push the stock up even higher. It doesn't look like that might happen today, but I still have a trade because of the fact that SMCI has immense volatility for this week and next. And next week happens to be when the 10K has to be filed, and there's high confidence riding that that will happen. I have a stock, I have a trade for you guys. So let's follow along in the next section. Okay, so let's look at the week so far. This is where the week started off. This was Tuesday. It was a short week. It opened at around 50, and then the first few couple of days were just crazy. It got to highs of around 65 before there was a big sell off that particular point. At that point, a lot of these high risk stocks were actually sold off. If you looked at Palantir, that got sold off as well. A couple of the others got sold off exactly during that time, and then it sort of consolidated around this time frame over here, and then this was yesterday and this is today. Today, if I zoom into today, it looks like today is almost identically following yesterday's time based movement, although it's less enhanced. So, for instance, around sort of this 10 a.m. mark, this is the 10 a.m. mark, so 18 UTC is 10 a.m. PST. You have sort of similar price action. That's where the floor was built around yesterday, and then it really didn't drop around this point. I'm using that as my basis now. And so we're around here. And so if I go into SMCI options here, right, I can say that I could sell a put around this price. Now, when you sell a put, it means that you're collecting credit. And if the price falls below 57 today, because you're selling a one DTE or zero DTE put, you would then be assigned this stock at 57. So it goes to 55. You'd be assigned a stock at 57, and but you've already collected the 42 cents per 100 contracts, which is $42. And if you sell five, then that would be 40 multiplied by five, which is $200, so on and so forth. So you can sell n number of options, but you need to have the option premium, the buying power available. And then you could then turn around and say, okay, if the stock actually does fall, so let's just say my theory doesn't hold and it actually falls to 54 or 55, and you don't want the stock, you could easily just turn around at around 12 p.m., 12:30 p.m., and roll this option to 45 or something like that, something ridiculous like that, because at that point you would be collecting more premium. And this is all obviously built on the assumption that SMCI is going to file, and that is most likely going to happen. So my second assumption is the fact that SMCI is not going to uh, default on its filing, and therefore it is going to file. And exactly what happened in December was that there was great price action before the actual Nasdaq extension that SMCI secured on the 2nd of December. Then there was a short blip that the stock went up and then it kind of receded. And I think that something that might happen. Investors will then take some time to digest the results, and then you could either just completely buy that option out, which means that the net would be your gain, or hold the stock if the or hold the actual credit put, or short put, and see what happens in the future. But that's my recommendation. Sell the put for just out of the money. So if I was you right now, I'd probably go for 57 or 58, and then I would turn around and I would say, okay, could I just sell this option, roll this option if the price action doesn't stick, or if I am going to be assigned and I don't want these stocks. All right, have fun trading.